We had an amazing run in 2024, with the S&P 500 going up by 25%. Bitcoin doubled as the President Trump got elected, and the interest rates went down a little bit. The recent inflationary wave looks like a thing of the past, and we look forward to see what this new presidential election will bring. So as we enter the new year, let's discuss what is my investment plan for 2025. Hi guys, my name is Giuseppe and I'm a finance graduate, former financial analyst and money nerd. And today I would like to discuss my current investment portfolio and what I plan to do for 2025 in terms of diversification of assets and new strategies. I'll start by saying that I'm kind of a lazy investor, and this can bite my ass sometimes. But my income is very volatile since I work in sales, so I usually prefer to be a lazy investor but a stakhanovist worker. Even so, it's not gonna cost me a lot to try to diversify a little bit. So without further ado, let's get started. Stocks. At the moment, stocks represent about 50% of my investment portfolio. Mainly these are represented by index ETFs. I'm very exposed to the US at the moment, with the S&P 500 and the Nasdaq representing each one 25% of my investment portfolio. So it is a very boring strategy, and I'm a little bit overweighted on a single geography. Also, it can exclude any kind of risky play such as single stocks or options. This is also due to the fact that these plays will be forced to be in USD mainly, adding another layer of risk since I live in Europe due to the currency exchange risk. For this reason, at the moment, I do not own any single stock in significant amounts. But for 2025, it would be nice to add not only a more geographically diversified ETF in the portfolio, but also some single stocks here and there. I was considering the VWRL, or the Vanguard FTSE All World Index ETF, that is weighted at 60% on US. So out of this 50% in total of my investment portfolio in stocks, an ideal composition would be 25% in Nasdaq, 25% in the S&P 500, 40% on the All World Index, and the remaining 10% over single stocks or option plays, based on opportunistic considerations. You might consider to buy these ETFs and stocks on LightYear, an amazing and simple platform that allows you to buy ETF with zero trading fees. And if you open an account and use the code PEPPE, we both get $10 of free shares. How cool is that? But please remember that your capital is at risk and the value of your investment can go up and down. In the future, I might also consider to buy some LIPs that are long-dated call options over a span of 2 to 3 years. I will probably decide to buy this over indexes or strong single stocks in case of a rebound after we hit a correction. Something that is quite possible considering how high it is our Schiller PE ratio. Real estate. So I recently made an offer to buy a house and it has been accepted. Now we're going on with the down payment and everything related to it. For this reason, from now on, real estate is going to compose about 30% of my investment portfolio, with a steady monthly increase based on the repayment of the mortgage. At the moment, I do not plan to increase my exposure to this asset class throughout stocks or anything of that sort, since this step was already quite expensive due to the transactional cost. In Italy, we also have a small tax exemption of which I can take advantage, or the repayment of interest on a mortgage for your first house. I'm probably going to stay in this house for the next 2 to 3 years. And since it is located between two private universities in Milan, my plan is to rent it out after I leave this house. Also, I look forward for decreases in interest rate in Europe that should cause an increase in the demand for real estate, so an increase of the property price. And eventually, if I refinance my mortgage, I can also decrease my monthly payment. If you missed it, you can find my video in which I discuss how to save for a house down payment. Up until 2024, I never add real estate into my portfolio, so this is gonna be a new one for 2025 by March at the latest. I'm quite excited and we'll see how things are gonna develop. I was also reading a report from UBS saying that Milan is definitely not in a real estate bubble, and it is instead fairly priced and probably among the least risky city in Europe for real estate investments. Well, we'll see about that. Cryptocurrencies. So the next part is crypto. And as I said, after my video on the Bitcoin ETF, I became very bullish on Bitcoin and I started accumulating my positions since January of 2024. I currently hold the majority of my cryptos into a hard wallet and they represent approximately 10% of my investment portfolios. The plan for 2025 is gonna be mainly to keep accumulating this position by dollar cost averaging and buy a small amount of Bitcoin every day, eventually investing a little bit more during dips. To be honest, with Trump being elected and more institutional investors getting investing into crypto, I do not think that Bitcoin reaching 1 million USD is gonna be impossible in the next 15 years. So I'm holding strong on my Bitcoin and chilling for now. Ideally, I would like this holding to represent 15% of my portfolio. Cash. Finally, I'm keeping about 10% of my portfolio in cash on a high yield saving account that, as per the time of this video, is yielding 3% per year. This also includes my emergency fund for 6 months that I sometimes use opportunistically on the market based on its conditions. But please take a note about the fact that I can do this because I am Italian, and here it's very hard to lose your job all of a sudden compared to a place like US. And even if you get fired, you get unemployment benefit for up to 1 year after that. And so this is very risky, but I try to keep a buffer in case of any kind of unforeseen expense and rebuild every time my emergency fund after this opportunistic use. The reason for such a cash holding is that after this bull run, I expect a correction this year. The Shiller PE ratio is very high for the S&P 500, and historically this has been correlated with low returns over the next 10 years. The last time we had such a high Shiller PE ratio was in early 2022. And the bear market, especially in tech, followed just by because the Federal Reserve increased the interest rates. Hopefully by the end of the year this cash quota is going to be decreased at 5% of my investment portfolio as more cash will be deployed into investment opportunities. Wrap it up. So guys, to wrap it up, I'm still very invested into stocks for about 50% of my portfolio, and I keep doing dollar cost averaging on this position, and I also look to add some single stocks on the mix. 30% of my investment portfolio is represented by my down payment for the house, and this is going to increase as I keep paying my mortgage. So the increase of the weight of this position into my portfolio is going to be dictated initially just by the repayment schedule of my mortgage. In that if other position I'm gonna be overweighted, I'm gonna balance this by paying off part of my mortgage earlier. When it comes to Bitcoin, the current position is 10%, but I'm trying to increase this at 15%. But since it's a very volatile asset, it might be that some months is gonna be even less than that. Or it might even increase faster than I expect to. Who knows? And finally, I'm holding some cold hard cash for 10% of my positions, waiting for a dip into the Bitcoin price or in the stock market. So far, this is how I plan to invest my money in 2025, and I hope to do an update video further down the line. So guys, if you like the video, please leave a like and subscribe, and you might also be interested in how I would invest my first 1,000 euros. You can find it here. Bye!